Hello and welcome. Today we're sitting down with Cuan Coulter, who is Head of International at State Street, to unpack some of the findings from State Street's latest Data Opportunity Survey and discuss what they mean for clients. The survey has spoken to 900 asset managers, owners and other allocators of global capital from around the world. So Cuan, you've had a long time to read over the results of the survey and there's a lot to unpack in there. But one thing that the survey did show us was that clients are increasingly, or we are entering an era of the holistic data strategy. Now, please can you put that into plain English and explain what it means and what it means for the asset owners and asset managers and the people, your clients, who are implementing this strategy?
Thanks, Liz. I suppose in short, a holistic data strategy is organizations treating data as a strategic asset. For investors, it's about essentially driving efficiencies and about having better insights. So on the efficiency side, if you streamline front, middle, and back, have less data redundancy, have more seamless access to data in a speedy way, you're able to save costs and you're able to be more efficient. From an investment point of view, the deeper your access is to the data, the more insights you can generate and the better your investment decision making is likely to be.
And there was a key stat in the survey, which is available on statestreet.com, if I'm correct.
You're correct.
To have a proper dig into. But one of the key stats is that only 26% of institutional investors and allocators globally have a holistic data strategy fully in place. But over half of them, 55%, are in various stages of implementation. What do you think makes having one of these strategies a strategic imperative for organizations, I suppose, of all sizes and all types?
Lots of organizations are searching for efficiencies. Notwithstanding that, I think in the asset owner community, asset owners have fairly complex data needs. Mm-hmm. Many of them are trying to commingle public asset data with unlisted data, and they're trying to synthesize that in a way that they can see across the whole of their investment book. And so I think there are different use cases or different purposes that different investor types are using to instill this data strategy in their organizations.
Mm-hmm. And it seems as well there's a difference geographically too. And North America is leading the adoption, and 33% of respondents in North America say they have one of these strategies in place. But you're head of international for State Street, so you see the rest of the world. So what are the rest of the world doing, and how is it that they're far behind, or are they catching up? What's the situation elsewhere?
So I think it's true that you have a more mature market in North America, potentially a more competitive market in North America, and frankly a market that has closer proximity to some of the very big data scalers. I think it's just simply a matter of time. So I think internationally the level of interest is just as high, and I wouldn't be surprised at all if you saw a sort of a significant ramp up across the globe in organizations pursuing holistic data strategies.
So do you have any advice for clients or anybody else thinking of pursuing a holistic data strategy? Because it doesn't sound like it's something you can just do overnight.
I think that's true. It's a pretty complex journey, but the rewards, whether that be enhanced efficiency or greater investment insights, I think are really, really well worth it, notwithstanding the fact that it may also preposition you well for the coming kind of AI revolution.
So let's move on to other parts of the survey, because it's very in-depth and you spoke to hundreds of asset owners and asset managers and all sorts of different investors. Now, it's interesting to note that only 24% of asset owners, compared to 35% of asset managers, are using back office data to generate competitor intelligence and inform strategic trends. So why do you think that's the case, and do you see that changing?
So I think you have differentials between asset managers and asset owners, partly because of the relative maturity and competitiveness of the sort of playing fields that they operate within. But I think that's a sort of a temporal dislocation. Like I think over time you will find that asset owners catch up, if you will, to asset managers. It's true to say that asset owners have very sophisticated data needs. They are often multi-asset class investors. They're often both direct investors and allocators. And so they need the ability to synthesize and aggregate listed and unlisted security data across their whole portfolio. And sometimes that data is generated by them, sometimes that data is generated by third parties. So they have fairly deep synthesization needs. In the asset management space, they have several of the same needs that the asset owners have, because they have a growing need to cover more asset classes and therefore more complexity in managing the data and synthesizing and aggregating that data. But they also have a greater drive towards getting closer to the underlying investor, so understanding their investor behavior better, so to speak. And I'd say that's perhaps maybe the big distinction between asset owners and asset managers in the pursuit of the strategy.
So I want to talk a little bit about the role of the custodian, because custodians have always known they're pivotal to the client experience, the client operations and frameworks, but 94% of respondents to the State Street survey have expressed satisfaction, and 34%, so over a third, have said they're very satisfied. But could you share your perspective on what's driving this positive sentiment? Why are people so satisfied? What's going on?
So I think it comes down to utility and accessibility. As you say, we've always had the data, but of late we've been able to bring that data back to investment decision makers in near real time. So we have at State Street the alpha front to back model, if you will, whereby we can synthesize data between front, middle, and back in near real time and redisplay it back to the front office. And so I think the utility value of that custody data is now beginning to be realized by asset managers and the asset owners that have that same front-to-back operability.
So I want to dig in a little bit more to the geographical split of the survey, which is displayed really well, actually. And it shows that nearly 55% of North American respondents are claiming that they are very good at integrating and consolidating back-office data, which is great. But you're head of international. So tell us what's happening in EMEA, APAC and LATAM and why that might be different.
So I think it's a question of catch-up. North America has the deepest legacy investment in their existing data infrastructures and perhaps therefore the greatest need to re-engineer those data infrastructures. And maybe on the other end of the spectrum in Asia Pacific, as an example, where there is less legacy investment in data infrastructures, there, if you will, the problem is less realized, but they're actually very facile at modern digital technologies, and I think you'd see a significant ramp up in utilization in places like Asia Pacific. And then in the European theater, you're sort of in between. So you have asset management industry, which is maturing at rates similar to North America, legacy investment in infrastructure that is not perhaps as deep as in North America, but has created the same sorts of need for re-engineering that you have in North America.
And how is State Street working in all these different areas to support clients to get on this journey to kind of get with the modernization program that everyone needs to be on and deal with everything that's going on out there, which is not under their control? So what are you doing?
So part of that is about allowing clients to see the utility value of having better access to data, better synthesis of the data, showing them the use cases, showing them just how much more efficient their processes could be, just how much more insightful some of their investment decision-making could be if they had access to the data. And so being able to present the data to clients and present the use cases associated with that data to the clients is what we do best to help them understand the value of the journey.
Cuan, thank you very much for sharing that with us and look forward to next year's survey.
Thank you.